A world where liquidity flows freely, and investment opportunities are accessible to a broader range of individuals. This is the promise of tokenization of assets, a transformative concept that has gained significant traction in recent years. Tokenization of assets refers to the process of converting the ownership rights to an asset into digital tokens on a blockchain or distributed ledger. These tokens represent fractional ownership in the asset and can be bought, sold, and traded on digital asset exchanges. By breaking down traditionally illiquid assets into smaller units, tokenization opens up a world of possibilities, unlocking liquidity and creating new investment opportunities. Before starting, don't forget to like and subscribe to our YouTube channel. So let's start. Benefits of tokenization. 1. Increased liquidity. One of the most significant advantages of tokenization is the ability to unlock liquidity in previously illiquid assets. Real estate, for example, has traditionally been an illiquid investment, requiring significant capital and time to buy or sell. Tokenization allows for fractional ownership, meaning that an asset can be divided into smaller units, each represented by a token. These tokens can then be traded on digital asset exchanges, providing a more efficient and accessible marketplace. This increased liquidity not only benefits individual investors but also opens up avenues for institutional investors and funds to participate in asset classes that were previously out of reach. Two, accessibility. Tokenization democratizes investment opportunities by reducing the barriers to entry. In the past, investing in high-value assets often required substantial capital. Tokenization allows for fractional ownership, enabling individuals to invest smaller amounts and diversify their portfolios across a broader range of assets. This inclusivity democratizes the investment landscape, empowering a wider pool of investors to participate in previously exclusive markets. 3. Fractional ownership. Tokenization enables fractional ownership, allowing investors to own a portion of an asset rather than the entire asset itself. This fractional ownership model opens up possibilities for diversification and risk mitigation. Investors can allocate their capital across multiple assets, reducing concentration risk and potentially improving overall portfolio performance. Additionally, fractional ownership makes it easier to invest in high-value assets that would otherwise be financially unattainable for individual investors. Use cases of tokenization. 1. Real estate. Real estate, a historically illiquid asset class, stands to benefit significantly from tokenization. Fractional ownership of properties allows investors to participate in real estate investments with lower capital requirements. It also enables diversification across different properties, locations, and types of real estate, such as residential, commercial, or industrial. Tokenization can also facilitate crowdfunding for real estate development projects, unlocking new funding sources and democratizing access to real estate investments. 2. Art and collectibles. The art market has long been characterized by exclusivity and opacity. Tokenization introduces transparency and liquidity to the art and collectibles market. Tokenized ownership of artwork allows for fractional investments, making it possible for a broader range of individuals to participate in art markets. It also facilitates the trading of fractional shares, enabling investors to exit their positions more easily. Additionally, blockchain-based provenance records can verify the authenticity and ownership history of art pieces, reducing the risk of fraud. 3. Intellectual property and royalties. Tokenization offers creators and rights holders the opportunity to monetize their intellectual property and royalties more efficiently. By tokenizing the ownership rights, artists, musicians, and content creators can sell fractional shares of their work, allowing investors to participate in the potential future revenue streams. This can be particularly beneficial for emerging artists who may struggle to secure traditional financing or reach a broader audience. 4. Commodities and alternative assets. Tokenization extends beyond traditional asset classes and can include commodities such as gold, silver, or oil, as well as alternative assets like carbon credits or renewable energy projects. Fractional ownership of commodities and alternative assets allows investors to diversify their portfolios and gain exposure to different sectors. It also enables more efficient trading and settlement processes, reducing counterparty risk and increasing market liquidity. Challenges and considerations. 1. Regulatory frameworks. The tokenization of assets operates within existing regulatory frameworks, and navigating these regulations can be complex. Jurisdictions vary in their approach to tokenized assets, with some embracing innovation and establishing clear guidelines, while others lag behind. It is crucial to ensure compliance with applicable securities laws, anti-money laundering, AML, regulations, and investor protection measures. 2. Security and custody. As tokenized assets represent digital ownership rights, ensuring their security is paramount. Secure custody solutions are crucial to protect against theft, loss, or unauthorized access. These custodial services must leverage robust security measures, including multi-factor authentication, encryption, and cold storage solutions. 3. Investor education and awareness. Tokenization is a relatively new concept, and investor education and awareness are critical for its widespread adoption. Understanding the benefits, risks, and mechanics of tokenized assets is essential for investors to make informed decisions. Education initiatives, transparent information dissemination, and investor protection mechanisms can foster trust and confidence in tokenized asset markets. Conclusion. The tokenization of assets represents a paradigm shift in the way we invest, unlocking liquidity and creating new investment opportunities. Through fractional ownership, increased accessibility, and enhanced market efficiency, tokenization democratizes investments and broadens participation across various asset classes. Real estate, art, intellectual property, and commodities are just a few examples of the sectors that can benefit from tokenization. So that's it for today's video. I hope you enjoyed it. If you did, please like it, and, if you haven't already, subscribe to our YouTube channel.